Happy Friday, traders. It is 8 a.m. Chicago time on Friday, the 22nd of September, 2023. This is episode number 2542. Derivatives trading, say it with me, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. um, Okay, let's pop right over into the convergent trading pre-market summary sheet here. We have a market that is overall leaning risk-wise, mild risk on. Treasuries kind of coming off a little bit, and and overall, we're all in a kind of a status quo condition here. Um, Not much to talk about, really. We had a slew of numbers this morning. Um, we got the Great Britain retail sales came in at zero point 0.4 versus zero point 0.5 year on year, came in at negative 1.4 versus negative 1.2, so slightly weaker. We also got the HCOB manufacturing PMI flash for Germany, France, Eurozone. Germany came in slightly better. UK PMI, S&P Global CIPS PMI flash came in line basically. Overall, manufacturing came in slightly stronger, services came in slightly weaker, and so did the composite number. And then, we had ECB's windows at 7 a.m. Eastern. We had some comments from Fed's Cook at 8:50. Fed's Cook, not much to add there, to be honest with you. He did not comment on monetary policy. The blackout period has ended for the Fed, so now these guys can come out and talk. So expect them to show up on the schedule a fair amount. Asian markets really ended pretty much mixed. The Bank of Japan maintained policy as expected. China debating opening up to foreign investment. There's a paper out in Beijing about that. And the U.S. Again, U.S. Fed speakers returned from the blackout. The calendar today only has the S&P Global PMI flash numbers for September at 9:45. That's 15 minutes after the open. And then at 1 o'clock, we get the Baker Hughes rig count. And that's it. So very, very light day. And what that might mean, and to us traders, is it might mean that it's good news because now the market can kind of move under its own power versus all this noise. The S&P balanced overall. We have pushed to highs recently, but most of the session was spent between 43.84 and 43.74 basically. 10-point range for quite a bit of the session. Point of control at 43.80. The volume's pretty good, 249,000 today. It's above the mode, or the most common volume amount for this time of day. The inventory is 79% long. We settled yesterday at 43.72. We've spent most of the session above. We actually closed at 73. The inventory is measured against the close, not settlement. Hey, while you're at it, pop quiz. I should have a segment as part of this just because it's not long enough already. I'm kidding. I know it's long. That is a pop quiz. So I'll pop a question in and see if you guys can answer it. But pop quiz, is there any difference between the close and settlement? Is there any difference between close and settlement? Okay, so we have about 25 points of range, which is actually pretty good. The expectation today is that we're likely to see some pretty decent opportunities. The market has sold off pretty good, and it looks to be reversing. We're opening inside of the prior range in the S&P and NASDAQ. Look at you all saying there's a difference between settlement and the close. Smart people. Okay, now tell me, why is settlement and the close? What's the difference? What is settlement versus what is the close? Very important distinction. Okay, so let's take a look at the technical side of things. But before that, we'll talk a minute about what was expected. This is from yesterday. That's not me right now. Um, this is from yesterday. The expectation yesterday is it's very likely to not be able to push through the VWAP pointed out here. Not likely to push through the VWAP in mid. The expectation is it's likely to turn down. That's primary scenario, and the target was outlined right here, 43.83. 43.83. Okay, that was the key scenario from yesterday. We did manage to hit the 43.83, and we managed to actually push through 43.83 being the next key balance point, or MC, volume point of control. Um, and um, and it settled at 43.72, so pushed through by a little bit. But yesterday, you could just read it. You could see that the gap is quite wide, delta was negative, and so on. So the goal was to sell any strength on the open, is to sell that and look for it to flush to the downside. So whether or not we get opportunities that we can easily identify, that's a whole different ball of wax. While I'm here, I'm going to push forward to in yesterday's video. This is on YouTube. You can watch this yourself and get the reasoning behind the posture. Crude yesterday, what's the deal here? Come on, man. YouTube. Crude, I talked yesterday about very likely. Oh, here it is. Okay. So, YouTube, this is what was expected. There you have it. YouTube was expected to stay inside of the prior day's range. Relatively bearish on crude, as we talked about yesterday. Crude has come a long way in a short period of time based on fundamental news and control. But yesterday, this was the expected scenario, and crude did not disappoint. Here's what crude looked like yesterday. There it is, like that. And if you want to see what that looked like on the TPOs, just look pretty sideways. You could see that every bar overlapped the prior bar. Overlap. Right? So crude opening at the upper end of the range, testing and failing to hold above the prior day's high. Crude likely to retest at 90 and a quarter again. That's what we're looking for there. And you could see balance in the profile, in the crude profile, just like we saw the prior day. So crude is just sucking in power to be able to squeeze on the next go. Looking at the S&P, let's step back and look at the S&P. This thing is really struggling to find buyers, as you can see here, leaving behind this big balance area. Let's move this back because it's no longer relevant here. There we go. So moving away from balance, pretty weak close on the low balance there. And then yesterday opened at the high end, test up just a tiny little smidgen. We opened at about 44.16. We went to 44.18, and then we pushed down and we closed at the low. Again, with the point of control at the upper end of the range, just like we saw on Fed Day. So again, it's making pretty decent progress generally in the afternoon on the sell side, but it's very likely to snap back with the volume or value not moving down with price on the close. it runs out of energy. Now, if the point of control, if it looked something like this, with the point of control down here, then we have plenty of energy to squeeze to the downside. So you could see yesterday, the low was around 66. The overnight low, not 66. The low was 71ish, and the overnight was 43.66. Not very much, not very much of a push, and we do have a big gap here above. Therefore, weak structure. We have weak structure up here back into bounds. So this, in my opinion, on a swing basis, longer term, this is very likely to squeeze back up. It's just not getting the value migration you would expect on such big news and big movement. But let's not get ahead of ourselves. We've got to trade what's in front of us, not what we expect. The composite, when we look at the composite, looks something like this. So we've kind of moved into this gap balance here. We closed right in the middle of this, almost against the point of control of this gap balance yesterday. Again, weak structure above, so this has impulse down, pretty deep pullback, and now it's getting its continuation. The yearly VWAP is down here at 4,300, and we're coming into major support here, major balance down in here. You can see that we're about to clear 43.50 being the notch out. We're about to start moving into a lot of volume below us, right? So this is likely to get supported as we move forward. We'll see what happens next week, but as we move forward, this is very likely to get support. Next week is the last full week of September. Next Friday is end of quarter, end of month, end of quarter. Q3 comes to an end. So there's likely to be some pretty decent volatility next week. But for now, just play it by ear. Here's the TPO chart, the big picture TPO chart. You can see where we moved into this balance. We kind of tested the point of control of this balance, and we're bouncing up in this area. So we've moved from the upper bounce to the next bounce down, and we have this gigantic region right down here that we're pulling back to. So that's the narrative. That's the big picture. What are we looking for today? Today, really, let's clear this up here. Today, really, not looking for the market to push directionally. Actually, let's do this on the TPO chart. It's easier. Not looking for the market to push directionally. Expecting today to just... What is going on here? Man, I don't like how they changed this. It's a bummer. So today, expecting open auction in range, expecting this thing to move towards settlement. I'm expecting it to take out, this was a weak close, expecting it to take out the close, and then at some point I'm expecting buyers to come in, and I'm looking for it to come back to 4,400 and retest yesterday's point of control, 44.05. So 44.05 up here, expected to get a test, but overall it's very likely to kind of find its way down. I'm looking for a pullback. It may not take out the low, not sure. I can't read the future, but this is what it looks like to me. It's very likely to kind of clean up the low here and then push back up. That'll be your primary scenario. I should say my primary scenario, not yours. The secondary scenario is it opens, starts to squeeze higher, pretty decent, might get an open test drive, open drive, pushes into 4,400, consolidates, pushes to 44.05, 44.07, and then starts to get weak. One-time framing's down, and then we end up with a market that just kind of slides sideways into the weekend. I do expect, given that we have sold off pretty decent here, I do expect that into the weekend you would get the opposite flow as folks square up their risk to go into the weekend. Nothing dramatic expected over the weekend, but that's what things are shaping up to be. Looking at NASDAQ, same sort of story. Same sort of story. The NASDAQ's a little bit higher up, but the NQ is expected to just do the same sort of dance. Opening in range, in value, in the NASDAQ, right? Right in this. So the NASDAQ expected to respond, potentially out of value, eventually find a bid, find a buyer, come back in, and start to squeeze higher above the 15,000, retest and take out the 15,000 in the Nasdaq. I'm not expecting a full comeback, but I am expecting the market to respond today. Secondary on the Nasdaq, push up, squeeze, come back up to the high of yesterday in the NQ, into the gap, failed auction, impulse down, come back into the middle, and just sit here. The market, in other words, in both scenarios, I'm expecting the market to rest today. We expect it to perform some tests, but I'm expecting it to rest. So it's after the open, after the early trade, probably once the first two brackets or the IB is done, in other words, the first hour, it's very, very likely to become a reversion trade. Okay, so that's what we're looking for there. Crude. Before I go to crude, the difference between the close and settlement is settlement, depending on your product, is based on the last 30 seconds. So the settlement price is the VWAP of the last 30 seconds of the primary session. The settlement is the more important indicator because settlement is the official price of that commodity as it closes. So money is debited out of your account or credited back to your account based on settlement. Close just describes the close of a bar. So the close could be the 4 p.m. Eastern close when the stock market closes, or it could be when the exchange closes at 5 p.m. Eastern, could be the close of the last hourly bar, could be the close of the last minute bar. The close for us is the last print, the very last print when the stock market closes, whereas settlement is a VWAP of the last 30 seconds. It is the official price, closing price of the session. Okay, that's the difference between those two. Something you should know about futures. It's a pretty important fact. Settlement and close are not the same thing. Crude. Crude really, I'm going to go yellow with crude here because I'm not going to have a plan. Crude in range, out of value, right? Value, you can see consolidating here. Value is becoming deeper. You can see it's building with a point of control of 90.50. It's building a pretty decent value range here. The expectation is this is likely to poke into value, come back up, squeeze to 91.25 from yesterday, 91.25. Test that, come right back in and finish somewhere in here in the 90s. That's what's expected for crude. Crude is very likely to rest into a third day here, form a nice composite, and then from there it could decide to push higher or lower. But there are forces that are going to try to push crude lower because we have an election year next year and politicians are going to squawk louder and louder the longer the crude sits up here, especially in the US. Okay, So we'll see how that goes. Good luck. I was going to ask where are you from, but we don't have time. Just make sure you're watching a risk today. If you had a daily loss limit triggered this week, it has been a busy week. But listen, don't be emotional about trading. Respect your emotions. You cannot shut them off, but understand that you do not need to act on your emotions. Don't act on your emotions. It's not smart. Um, so just always understand that you're going to feel a certain way about actions taking place in the market and how your positions are being treated, but that's not the issue. That's never the issue. Being emotional is never the issue. It's just the way your mind works. The issue is acting on those emotions. We don't like these emotions. They trigger a flight or fight response within us because we don't want to sit there feeling bad about something that happened to us or that we did. And so we look to take action. Our mind is trained to do that. Run, fight. It's the action that gets you in deep poo-poo. So be okay sitting with your emotions. Be okay sitting with the emotion that you missed a trade that you had planned and were waiting for the whole week. Be okay with the emotion of you put on the perfect trade with the perfect execution under the perfect plan, but your stop got hit and you're out. Okay? Be okay with that. It's not, don't fight it. Don't fight it. Just understand that it's a randomized outcome game, and it's based on luck in addition to skill. Good luck.